Hudson Valley Bookkeeping. Today we have Lucky and Archie joining me. Archie is the newest member of our family. Say hi, Archie. Hi. And here's Lucky. He's usually always in our photos. Today we are going to go over how to rehab your current rental property and get it ready for sale. We'll also go over your basis. All right, let's get started. Hi guys. All right, today I'm going to show you how you take a regular rental property and rehab it and then flip it. I'm actually undergoing this right now on my own property, and I think this is a great example. I was thinking about it, that probably a lot of people need this explained a little better. Okay, so I'm on a demo file, and one thing to notice right away, when you go to rehab a property, let's say you've had a tenant in there, like I have had a tenant for 12 years, and I was just lucky she paid the last year and a half. But what happens now, right? We're going to do some major improvements in order to sell, which is different than a couple little repairs and maintenance. So I'm going to show you how I'm going to do this in my own set of QuickBooks. First, let's start out like right now. I usually do this on like a big renovation. I would break it out by year and then sub it out from there. Because remember, these expenses are going to go into your basis, and we'll talk about basis more later. I'm going to keep it up in fixed asset. And then I don't even know the numbers right now. 2021 renovation. All right, so that's the first part. But then what am I doing in this renovation? Well, I'll tell you all the stuff I've done so far. I had to have the floors. So they're completely sanded and refinished and repaired. I had the roof redone. This is just a blast spending all this money. I know you feel my pain. Roof. I'm getting my stoop redone. So like the front porch, it has a flagstone stoop, and that has to be kind of deconstructed and then redone. Remodel. What are, oh, the fence. The fence is a disaster. Most of it's getting fixed. So they're not, like a little repair would be, you have a call a plumber and you spend $100, or forget it. A plumber never costs $100. But it's a small repair. But now we're trying to figure out, like, I want to know exactly how much money am I spending on this rehab before this goes to market. So I have plumbing. So we're going to redo the hot water tank and a couple other things. And then let's say that's basically what we've got going on this house, right? So we've got fences getting done, the floors. Oh, I forgot about one of the biggest ones. The painters came. So they're already done. And so this is like one. The other thing, painting. So they painted the interior of the house. They power washed the outside. So we'll just call it painting, power washing. Then there's one other. We'll leave that out. Oh, okay. Okay. So far we've got the fence, the floors, painting, plumbing, porch remodel, roof. All right. So as you spend money on these things, right? Let's write a check. So, well, I'm going to just pretend all of this is coming out of the checking account. All right. So let's say this week, I think at the Home Depot is where we got the new. So I just click tab. Now I can click Q. This is a vendor. And I think it was like $1,300 in fencing. So now I always say, set yourself up to succeed here. So I've already made my codes. It's much easier to do that the way I just did. I did it in the fence account. And then let me turn off these classes. Okay, and then painters. Here's another one I just thought of. We're redoing the bathrooms, right? So I don't really need to know how much. There's just a 1.5 bath house, but I want the bathroom cost. I'm just going to call it bathrooms, right? So that would be like I ordered 2 vanities, I bought tile, things like that. Okay. Now let's see what we did so far. Is this the one I used? So we did Home Depot for the fence. We did the painter. Then you can have your tile guy. This is what I would do to bathrooms, right? Like, don't make it too broad. You're the one that's spending this money. You have a decent idea who you're using. Not using real names. Porch guy. It's 36. Make porch remodel. Good. Okay, look what happened. And this is what's happening on mine too. If I were to write all those checks, I wouldn't have enough money. So type in your own name. Giving money. Couple ways you can do members equity. You know, you can do one each year to contribution, like how much, so you can see how much. I just did this with the client, going over every dollar in and out. But sometimes when you're going to be just giving, you're not going to be taking, or you really need to keep track. Did I spell that right? Okay. Because when you run, also guys, when you run a profit and loss, because these are hitting the balance sheet of an asset, it's not going to show as your expense. Okay. So this is basically what I'm going through as I get ready to rehab this house and sell it. I'm trying to think of one of the main things I'm waiting on right now is a plumber. Plumbing. Okay. So we have that. Now, here's another thing that I've encountered was I have to go to Lowe's and Home Depot and wherever the whole time that this started. So what I did was, I mean, and this depends, and usually most of my clients with properties don't usually use a credit card. It's very rarely, or they'll use a debit card off of the checking account. But I am completely against debit cards. I'm terrified of bank fraud. So what I did was I had a credit card that I never use. And so I dedicated that credit card to this renovation so that I know that anything that goes on this credit card, whether I buy it at Amazon, Home Depot, Lowe's, anywhere, that it is for this remodel. So what you could do here I went list chart of accounts. And this is the thing, like if you have a property that you need to do a lot of things with, just get a credit, if you're like a single member LLC or something, they don't usually give out credit cards for those. Just get one in your single member LLC as a disregarded entity anyway. So it won't matter. Just use one of your own credit cards, but just keep it only for your property. So I have an Alaska Airlines. It's like a Bank of America, BOA. The other thing I did that I do with anything I do with bookkeeping, I created a binder for this house. And then because, it's just a huge amount of work right now getting this done. I just put the binder on my kitchen island with a big thing of tape. And then anytime I walk in the door with receipts, I just tape them in there. I just thought of another thing we've fixed. But this I would actually just put to repairs and maintenance. It was the water softener people. We had it serviced. Now that is the difference. Getting the water softener service where we just had a guy come out, check it, adjust it. I think it was like $600. That's an actual repair. That's not a major improvement to the house. Like we didn't replace the roof. We didn't completely redo the floor. If we had bought a brand new water softener, then that would go to a fixed asset. In this case, the guy just came out. I don't even think it was $600. Let's say it was $300. So that's the difference. Okay. Okay, guys. So here I am. Like I said, I have this credit card. I scrolled it up so you can't see the account number. So I just want to show a couple, just how it works with the credit card. So right here, I just put in 3 charges that, there you go, right? You could have 100 of these. The next thing is, if you pay the credit card, make sure you pay it out of the account you used for your rental property. Don't pay it personally, please. But let's say this is where it would be good if you don't have the money to totally pay off this. And let's say you charged, more at Lowe's, and it was ordered kitchen cabinets or something. Let's say right now you don't even have the money to pay all of this. You're going to charge it, and then you'll pay it off when your house sells. All right. So if remember again, I loaned this bank account money, right? I gave it 10,000. Wrong one. I keep going the wrong thing. All right. So I gave that 10,000. So let's say today you go online and you just pay Lowe's a flat amount. And this is why you want a credit card that has nothing else on it. Let's say you just pay $2,000. It wasn't Lowe's, so excuse me, it was Bank of America credit card. There it is. Okay, so maybe you're going to carry a balance. So we go up here. But the good thing is, and why you want to have this credit card on your books. Oh, wait, ignore this date. Let me just fix this. So we can follow the balance, right? Okay, so you're charging on this one credit card. And then let's say, however you're funding it, you're deciding what you're doing with your cash flow. The reason it's good to have this credit card inside your QuickBooks and completely and only for your renovation is one, for audit, right? So if you ever get audited, you have every single transaction and you're not giving your CPA a spreadsheet. This happens all the time. I hear about the spreadsheets, or I'm converting people off spreadsheets. So this way, if you need to change things too, in a spreadsheet, you've got to worry about your cells and the calculation working or missing a cell. Here, you're not going to have that problem. And you can obviously see easily how it's coded. So just post your, I was having an issue with this bank feed, so we'll deal with that later. But you would just post your credit card charges individually, code it out to the piece of your renovation, and make sure you pay the credit card out of your, the bank account that you use to operate your rental. But I will show you right now how you would do it if you're really losing your mind and you paid $2,000 out of the operating checking account, and then you paid a certain amount out of it somewhere else. And I see stuff like that all the time, where people are just throwing money at problems. They don't even know where they're sending the money from. Okay, so I'm going to put another payment in here. Let's say the difference, like you didn't have it all, so you took some out of your personal account and you paid the rest out of this checking account. Didn't we have a contribution equity? 2021 contribution. So now let's say you paid the credit card off, but you paid $2,000 out of the checking account, and instead of doing the right thing, which would be to send the money to your operating account for your rental property, you just went ahead and clicked and paid right out of your personal checking. So this is how you do it. Okay, now you've paid off your credit card. It's also fine if you're carrying a balance. You would do a reconciliation on this credit card. You can buy that in other videos. So let's just look right now at, let's say the flip's over. I was having a discussion with someone I was training recently about what happens when you sell, right? And what are we talking about when we talk about basis? So basis is this. I want you to take a really good look at this piece right here. This shows that we bought the building for $550,000, right? Okay. Oh, shoot. Ignore that. Okay. So the purchase price is $550,000. You've taken depreciation. Now I just made this number up of $75,000. That means, and depreciation is kind of theoretical sometimes, like, your building hopefully is appreciating, meaning gaining value. But in the tax world, you can take depreciation, and that's saying that the building is being worn out and it's losing value. What happens, and this is why a lot of people do 1031 exchanges, is you could, depending on the sale, it can get funny, because let's say now you sell this for 600. Your basis right here is 550, take away 75, but then I want you to add back in all the money you put in as capital improvements. So I just want to show you here. Right? So we have 550,000, take away 75,000. Now we're at 475,000, but we just spent 18,610.97 in improvements. That's where you get to your 493,610.97. Now here's a problem. What if you sell this for 700,000? You have a capital gain of 206,000, right? So what most of my clients do is that they roll these gains into a new property using a 1031 exchange. But that's explaining, that's just depending on what you want to do. Otherwise, you'll just pay income tax, on the difference between your basis, what you've got into it, and what you eventually sold it for. So also a big thing to understand about that depreciation, it's reducing your basis. Okay. So I hope this helps explain a flip, the whole purpose of this video is, one, to explain the difference between a big renovation on a rental property versus like little small repairs, which would not be capitalized. When I say this is capitalized, all I mean is it's what we call a capital improvement, and it goes on your balance sheet. It's not really a scary term. It just means you are really improving, right? A capital improvement. It's a major improvement to your property. It's not a little plumbing leak called a plumber repair. It's major things. And in this case, this is kind of like a scenario, like I'm saying, I'm getting ready to prep a rental house for sale. It's a great, time in the market to sell something. So that's what I'm doing. All right. So in this way, make sure you make your sub account so that it takes 1 minute to make the sub account. It takes hours to go back and recode and look up things from the past. But if you post them the right way from the start, you're going to have a lot better time getting this, really understanding where your money's going on this. All right. And then the other thing really is to talk to your accountant about your basis and how much depreciation you're taking. I hope you found this helpful. Please put in the comments any other videos you'd like to have me make. All right. Have a great day.